It's so easy today with so much information to be like, you should invest in stocks or rentals or Airbnbs or storage or crypto or whatever it is. And people make money in all of them, but you need to be able to understand how it fits into your own investment strategy. We love storage for the cash flow aspect of it. Having something that can generate revenue to allow you to buy time even when times are tough, that then you could take advantage of the long-term upside.
Going back to service-based businesses or these other industries, it could take years for you to add millions of dollars worth of value. Whereas in self-storage with a single asset, we've seen time and time again, millions of dollars of value on a cap rate being added in a matter of months. All right, everybody, today we have an incredible episode because we are pitting self-storage up against other asset classes and just how incredible self-storage is, the pros, the cons, and how it just compares to other opportunities out there because, let's be honest, there's no shortage of investment opportunities out there, and it can be difficult to decide which way to go. So today, we're pitting storage up against other asset classes, giving you the good, the bad, the in-between, and letting you guys make the decision. With that, everybody, let's dive in and get to it. George, how the heck you doing, man?
Doing good, Connor. Excited for a great topic today, man.
Yes, no, it's such a good one, man. We're talking self-storage, we're comparing it, we're stacking it up against these other opportunities out there because that's a question we get a lot of times. You know, it's like, why would I get into storage? You know, I've got this business, I'm doing this thing. Or you've got folks that are very interested in actually exiting their current businesses and going into something totally different, and storage caught their eye. So we want to talk through some of these things today with everybody and talk about, you know, these pros and cons and benefits of storage and how storage differs from these other asset types, not just in real estate, but also just business in general. First and foremost, let's talk about the struggles that we hear from a lot of folks that might have other businesses. Before the podcast, we were talking about service-based businesses and some of the dynamics there that they can be great, but there are dynamics there that absolutely differ from the self-storage world. I mean, kind of give people your background, I guess, a little bit, because you for a number of years had like a web design business that you guys had.
Yeah, for sure. So yeah, I got my start in web design, which is pure service-based business, which is the great upside in the sense of that it costs very little to run, especially when it was just me. And then it ended up being me and my wife. But you know, it's really just you're paying for any people and software really, and everything else is just cash that comes in. And so like there's a lot of great aspects to service-based businesses in that, but with something like storage where you have the real estate tied on top of it, you have much more upside on the long-term piece to it. And so we'll kind of talk about this today, going through these different asset classes and businesses that they all work, right? And it like we get into business for the goal of trying to make money. And it's usually in the sense of like, I don't want to work for someone else. I want to be able to start something myself or acquire a business, and that's great. And the goal is to make money without it hopefully taking over your entire life. Mm-hmm. And there's different pros and cons to as we go through rental properties, Airbnbs, service-based businesses, and then self-storage that all have their ups and downs to it. But I think what we find, and you'll hear us throughout today's episode, is that a lot of entrepreneurs, when they're making the look of, oh, I want to get into real estate, because anyone at this point knows that real estate is something that is a part of wealthy people's portfolios, no matter what it is. But a lot of people, their traditional way of thinking is I'm going to get a rental property or fix and flip or something like that. And what we're trying to help people to see is that it doesn't just have to be that. And especially if you're an entrepreneur or own a business in another industry, storage has a lot of layers that you can put onto that where your business experience can transfer really well in ways that you wouldn't otherwise be able to utilize on something like a traditional single family rental.
You know, my wife and I had looked at investing in real estate for a very long time. And then we started looking, shameless plug here. I'd read the book by Walker Dybel. It was Buy Then Build. And it was about buying cash flowing businesses. And being in the storage industry and all those kinds of things is like, oh, that, you know, it makes a ton of sense. Storage is a business, has the real estate aspect to it, it's icing on the cake, all of that. I was like, man, this like business acquisition thing is really attractive. It's really cool to be able to go out and find these different businesses out there that have the cash flow, because I'm like, first we need the cash flow. Like, we got to have some cash flow coming in, be able to start saving a bunch of money to be able to go out and execute on other opportunities and create other opportunities, and obviously just do well for ourselves and the family and all that stuff, right? So we actually pivoted away from focusing on trying to find and make some real estate moves, and ended up finding a rain gutter service and installation business. Bought that thing. Amazing business, great business model. Again, we're talking service-based businesses. We do mostly like new home construction installations for a bunch of builders and stuff here in the Boise and Idaho areas. But one of the things, to George's point, is there's not the real estate aspect. And I'm spoiled coming from self-storage and seeing how you can have the business and the real estate, and you've got your cake and you're eating it too. I'm like, man, the first thing we got to do is buy some property, right? So a lot of these service-based businesses, they might have really great cash flow, but there's not a ton of tangible assets behind it. A lot of it, value-wise, is goodwill. There's not the real estate aspect. You might have some machines or some equipment or some inventory or something like that. Maybe you've got some intellectual property. Maybe there's some patents and different things. Like, all those things are huge amounts of value. But real estate is such an amazing piece of the puzzle for a business, for tax benefits, for value, be in a spot that you own, being able to do other strategies. Like you said, there's some of these fundamentals that you can apply. You could essentially office hack, let's call it, where, I mean, you could buy a property, occupy some of it, lease the rest of it out, have your mortgage paid for, essentially, your debt service paid for by your tenants, or a good portion thereof, right? And I know for us specifically, depreciation is one of those just incredible tools that allows us, it's that non-cash expense that we can say, hey, depreciation, we're going to write off X amount, or we have this non-cash expense of X amount per year. You can reduce, your tax exposure. There's not really any other thing that I've identified that allows you, in a way like depreciation, to make the money in the business and to keep the money. And that's where the real estate aspect comes in. Well, and I didn't even touch on accelerated depreciation, which is another huge benefit of owning real estate. Instead of, that long-term depreciation schedule, you can have a cost segregation study done to achieve a quicker accelerated depreciation schedule. So you might be able to capitalize on getting a majority of that depreciation year 1 or 2, or however it is that you want to spread it out. A lot of this stuff is up to the accountants to figure out. Don't quote me on any of these things, but at the end of the day, those are amazing strategies to reduce taxable income. The other thing is financing and lines of credit and all of these other tools that you can use at your disposal when you have a business that has the real estate collateral to it. So when we're talking financing, if we're going to acquire a storage facility, obviously there's a large amount of collateral because there's the real estate there. So wanted to hit on specifically that service-based business side, because that's something that we both directly have some good experience with, and why we just think storage is such an amazing thing.
All right, since I know my listeners are self-storage nerds just like me, I wanted to share with you some of the best ways that you can get started investing and owning self-storage. So you may not know, but I wrote a book that's hard to even call this a book. I mean, this is a manual. We're talking 400 plus pages, which include all sorts of information about how we have been in the self-storage industry. That's everything from how we got our first deals, to scaling, to buying deals in today's market, what's changed and what remains the same. This is an up-to-date book that shows you how the market has changed and how you can win today. This isn't simple, this is how you buy a deal. No, this goes into everything, including how you scale and create a self-storage business. You can get a physical copy, an ebook, or the audiobook, plus free access to bonus content at the end of each chapter. You can get it today. It's available on Amazon and other platforms in which you can follow the link.
When you're looking at, your overall investment thesis for anyone as an individual, it's like, what is the strategy that you're trying to utilize? And then how does the different avenues that you're going fit into that? And it's so easy today with so much information to be like, you should invest in stocks or rentals or Airbnbs or storage or crypto or whatever it is. And people make money in all of them, but you need to be able to understand how it fits into your own investment strategy. And you might be a high W-2 earner and you want to keep your job, but you want to be able to offset some of that income somehow with real estate. And so for you, it's like you're probably not going to want something that is incredibly hands-on. You're probably not going to take over a service-based business where you're going to have to do all the work yourself. Or you are someone who you have an existing business that you're an entrepreneur and maybe it's a landscaping company or Connor's mentioning a gutter company and whatever it is, and you're making good cash flow, but you don't have something with real estate attached to it to utilize things like depreciation that can help you with your overall strategy. And so when you're thinking about these different businesses, think about how they tie in to everything else that you're doing. And so the reason why we really like self-storage with this is that it has multiple layers that can benefit your overall strategy. With Connor's talking about the cash flow of it. Then you have the equity upside of you're buying real estate so you can get the appreciation and that it increases in value over time. You have the depreciation that comes with it. The other part that's really powerful is the ability to scale with it. In that it is, if you have a service-based business, like with my web design business, it cash flowed really well. But if I stopped working, no money came in, didn't scale. And my options were to either to productize it or to hire and build a team around it. With storage, you don't need as much people to scale in that sense. Like you have one facility and it's 100 doors or 200 doors. You don't need to hire 100 people to be able to run that. You can scale it really, really well without it taking over your entire life. Doesn't mean that it's totally passive, but in a relative way compared to other businesses, you can build your processes to really scale your storage portfolio compared to other types of businesses out there. And that's a really powerful thing when you're trying to think of the long-term goals of your investment strategy.
The scalability, that's something that we constantly talked about, man. When I was like in operations every single day, doing all that stuff, when we would talk, and this is kind of just a side note here, when we would talk about anything that had to do with solving a problem, we weren't just solving a problem for right now today. It was solving a problem forever. It was like, okay, this situation happened. How do we make sure that we limit the possibility of this problem happening again? And is that solution actually scalable? Is this like a Band-Aid, or is this something like a process that we can create? Or is there a filter we can put in the front end to maybe not capture this tenant pool or this kind of a customer? Or maybe it's a just random technology process that converts people better, whatever it is. Is it something that can actually work not only today, but across 10, 15, 20, 100 facilities? And I think that's a really important thing to be thinking. And I'm telling you right now, man, with the technology that exists today, there's never been a time in history that things could really be more scalable with less resources and people power and that human capital element than today. I mean, we've got the phone systems and we've got automatic gates and doors. I mean, you look 10 years ago and there's probably very few facilities you could even rent online, like even some of the big players. Whereas nowadays, that's the expectation. So just a bunch of other things I wanted to touch on the scalability piece. Super, super important.
I think too, like the scaling piece ties into the exit as well too, because even if you can scale your service-based business, like whether it's web design, a gutter company, landscaping, there's only going to be so many people who will want to come and buy that from you. You could increase the cash flow and make a lot of money and make a nice living off it. That's great. But if you compare trying to scale something that is just pure cash flow versus a storage portfolio of 2-3 facilities, there's institutional buyers out there who will take that. When you increase the cash flow and now you're factoring in commercial real estate, now that value isn't just more money in your pocket. It's factored in with a cap rate and then exponentially increasing that value to it. So an extra dollar in a service-based business versus a dollar in commercial real estate, they're not the same thing when you're thinking of what the exit looks like from a valuation. And then on top of that, the buyer pool for it. There's way less people out there who want to run a gutter company, landscaping company, web design company, whatever it is, than who want real estate in their portfolio. So it's a really powerful thing to be able to add in to your overall strategy.
But I think it's also a very important thing to note here that I don't want to sell you guys on this idea that you don't have to do anything. I think it's so important that you all understand and that we all understand that no matter what we do, if we're doing it well, it is going to take work. It's going to take attention. It's going to take time. We cannot just go out and buy a storage facility and plug in some technology and never see the facility, never talk to the people that are managing it, never talk to our employees, never do any kind of coordination or work at all. And so I want all you guys to understand that storage is very much an asset class like any other. It's a business. You've got to focus on it. You've got to take time. You've got to be doing your due diligence, whether it's finding opportunities out there or it's running your business in storage. You have to keep track of your expenses and your revenue and to make sure you're doing well and you're planning ahead and you're setting aside reserves and you're not wasting money on an employee that's maybe not performing well, or it's a contractor that's not doing what they should be doing, or not maximizing your revenue by putting dynamic pricing in place or capitalizing on technology to boost occupancy and all these other things. It's so important that you guys know and understand that, yes, maybe there's not toilets, maybe there's not tenants like you have them in these other asset classes in real estate, like multifamily and residential homes and some of this, but you do very much have the aspect of tenant interactions, of working with people, of running a business. It's not a passive thing in any way, shape, or form.
Yeah, and this ties really well into comparing storage to just real estate in general, because a lot of people think that because there's no tenants or toilets, then yeah, it must be way more hands off. It's going to be passive, going to be super easy, which like on the surface level makes sense, but for all the reasons you layered in just there, Connor, of how storage is a business, you may not be dealing directly with plumbing issues or 3 a.m. phone calls for a broken water heater, but you need to be either yourself or your team dialed in on your marketing strategy, on understanding the seasonality of self-storage, on knowing who your customers are, because that's going to be very different if you're in a first tier class A market versus in a more tertiary market with no REITs in the area. And so, yes, storage can be more passive than dealing with Airbnbs and people on vacation and in travel mode versus someone who might visit their unit once a month. But it is very much hands-on from the business lens of it, and making sure you have your, like you said, you're knowing your revenue, knowing your expenses, making sure you're running this purely like a business that does cash flow. Which again, when we go back to the people who are looking at what type of asset class do I want to get into, that's why we love seeing people with previous business experience come into storage, as opposed to trying to be a business owner now running real estate or Airbnbs. The shift to going to storage is now you're getting to take all of your business experience, dropping it into something that is a business and just happens to have real estate on top of it.
Those fundamentals are so often the same across the industries. It's all the same levers, right? It's like expense management, like pulling that lever, like revenue, like driving revenue and doing your whole value add thing, like pulling that lever. And you can only, increase revenue by doing a few things, right? It's like increasing the value of the customers, or increasing the frequency, or it's increasing the quantity, all of those things, right?
And like, I look at that as a good thing too, compared to a rental property where it's just like, you just get a tenant in and you raise your rent every year. With storage, like if you have business experience on one side and you bring it to storage, like that to me is the fun part. Like, great, you have these different things you can do to be creative and increasing your cash flow, as opposed to just buying this house and hoping that it makes more money over time.
Yeah, and just being subject to whatever the market, is saying that thing is either worth, or those different things. Another list of things where you kind of touched on the lease aspect. You've got the ability, you've got these month-to-month leases in self-storage. You don't have a lease that's 6, 12 months or whatever and can't adjust it. You've got month-to-month leases. You can send a notice, 30-day notice at any point in time, and increase somebody's rate and increase the value of the facility. Yeah, you might lose some occupancy, but if you can achieve higher revenues at lesser occupancies, fantastic.
If you think about that comparison too of the leases, like you have rental properties are a year, then you have, an Airbnb customer or a hotel customer, they're a day or a week or whatever, like much more short compared to that. And then you have, you could do your industrial triple net where you got 3 to 5 year leases, or even up to 20 years. So the storage sits in this middle ground of just being month to month. It's not day to day like Airbnb, but you're on the front end, you're changing your rates daily in those competitive markets. So you have that flexibility where you're not, like you said, on a year lease, just stuck in where it's like a lot of the time you're just waiting. Whereas with storage, like you said, month to month leases, but then you have 100 people, 200 people, 1,000 people at your facility all coming in at different times. You can really start to change how you're driving your revenue there. And that's why it's always fun, like looking at a rent roll on self-storage, because it's like your 10 by 10s listed for $100 on the website, but then you have 50 10 by 10s and they're all paying crazy different prices depending on a promotion or when they moved in or they've been there 5 years. So they've been through rental increases. So it's a big difference in looking at just comparing how long customers stay in comparison to different asset classes.
Exactly. And that's I mean, a huge benefit storage wise is that value creation. I don't want to discount that at all, and how quickly that those things can happen, where you can go in the first just couple months increase the value exponentially of that asset. I don't know of any other thing out there that allows you to do that in that amount of just a short period of time. This is one of the things that really caught my attention about self-storage way back in the day when I actually first heard of, AJ and all these amazing things that he was doing in the storage industry. I was like, man, this is incredible. I've heard of people doing this with residential housing and in these homes and stuff, but the idea that you could do that with this massive commercial property, do this refinance strategy and all this stuff, like do this immediate value add strategy and pull that money out and redeploy it and do all these things, like that is incredible. I mean, if again, going back to service-based businesses or these other industries, I mean, it could take years for you to add millions of dollars worth of value.
Yeah.
Whereas in self-storage with a single asset, we've seen time and time again, millions of dollars of value, on a cap rate being added in a matter of months. Like, I mean, this is a real thing.
Yeah. If you're going to increase a service-based business by millions of dollars, it's going to be off the cash flow of it. You're going to figure out a way you can just blow your revenue out of the roof. On the other side with real estate, with a rental property, like, yes, you could increase something by a lot of money, but it's usually going to be by doing some type of renovation. And you're going to go in and you're going to have to put in a lot of capital. You're going to have to redo the bathroom, add an addition to it. It's going to be time intensive and money intensive to do that. With storage, a lot of this can just be through the operations. Like, they don't have a website, they don't have a marketing strategy. So you're not necessarily coming in and having to do a full reblown expansion or renovating the property. You're just running the business better. Yes, you can do those things with expansion, but even still, maybe it's just adding parking that wasn't there. You're just utilizing extra lands to it. And so not only are you able to do it quickly, like Connor's saying, but if you're just focused on the operational value add, it doesn't have to be incredibly money intensive to be able to have that exponential increase in value. Because when you're factoring in the additional cash flow, tying that into your cap rate has huge impacts on the overall value of your property.
I was just on one of my one-on-ones the other day and had somebody bring up this offering memorandum from one of the brokers that they were coordinating with, and it was this facility that had I think they had about 5 or 6 parking spaces, and we brought up the unit mix and brought up some photos of the facility, and I'm looking at this thing and I'm like, 5 or 6 parking spaces, like, dude, you've got like all of this room over here. You could literally go in, and again, caveat, if there is demand, like, don't go out there and just assume that you can build a bunch of units or put parking in or any of this stuff without confirming that there's demand for it first, because then you'll just have a bunch of empty parking that might look really cool for a minute, but you don't want a bunch of just empty parking. So parking stuff is a prime example, because right then it was like, dude, you could go in, and if there's demand, you wouldn't even have to invest a ton of money, do a ton of CapEx, nothing. You could get some parking blocks, paint some numbers on them, throw it in your property management system and list them. You could literally do this in a day and start leasing those things up. Maybe it's $20, $30, $50 a parking spot, whatever that is. They probably could have fit 15 more parking spaces on this facility. So, they could have had, 25 maybe parking spots total, as opposed to 5 or 6 or whatever it was. I mean, just that alone, if you're renting those things, even at, extra $30 a month, and you lease those things up, shoot, you put that on a cap rate, and dude, you just created tens of thousands of dollars of value in a day.
Yeah.
It's incredible.
For no extra work. Yeah. We've even seen it too, where adding the parking revenue to your underwriting has been the difference of banks approving on financing.
Such a good point.
With Live Oak, where they've looked at a facility, didn't hit the DSCR that they wanted, they come in and add the parking piece to it, gets approved. And so again, like Connor's saying, the demand is really the key part there. Just simply saying, oh, we're going to add parking doesn't matter if no one rents from you. But point being is that it doesn't have to be this massive, we're going to add new buildings and doing an expansion. You're just literally making more lines on the ground that people can pay, and it has massive impact on the overall potential of your business and ultimately the cash flow that comes back to you.
And something I want to hit on here too, we need to understand too that self-storage, like every single one of the facilities that you acquire and that you own and operate, it is a completely different business. Like there's a lot of things that you can standardize, SOPs that you can have in place, and how you operate, how you handle auctions, or how you handle move-ins and move-outs and those things. Like you can standardize things, but from an occupancy standpoint, from a utilization standpoint, from the products or the units, quote unquote, that you have at that facility, all of those things are different. The seasonality might be different. Maybe one facility is located in an area that gets a bunch of snow and you've got to account for having the snowplow company ready to rock and roll in the wintertime. Or maybe it's, down in Arizona where you never have any of that. You don't have to worry about snow for the most part, right? Knock on wood. I think they've had some random skirts here and there where they get like some snow and everybody like freaks out and the, country shuts down there or whatever. But every one of these assets are their own businesses. So yes, like amazing opportunity in the storage world to scale and to standardize. But I also don't want to oversell you guys on that idea and make sure that you understand that these individual assets have to have their own business plans, their own strategies, their own means of operating that may be slightly different from some of the other ones that you operate. So I want folks to know that yes, storage is amazing in its ability to plug in remote operations and to standardize things. But at the end of the day, they are their own businesses and they have to be treated as such.
Yeah, this is important. I think one of the biggest mistakes people can make in storage is they buy one facility. They're like, this crushed. Like our operations are so dialed in. We made a ton of money. We're just going to do this 100 times. And then you go in so bullish on the second deal, you end up taking like all the credit of our operations were dialed in, where really you might have just been in a place that had a good market. And so like if you would have taken that same facility and plugged it somewhere else, it might not have had those same impacts. And so it doesn't matter how good your SOPs are, how good of a team you have, how good your underwriting is, if there's no demand.
Mm-hmm.
And again, this concept applies not just to storage. If you have a restaurant that crushes in one area and you go try to do the same thing in another state, they're different businesses. It doesn't mean that it's gonna go well. That's why you have chains that shut down half their stores because they did really well and other parts of the country opened up new places and didn't work. And so I think that's why it's really important to understand, like Connor's saying, that you have to look at each storage facility, on an island, on itself. How can this thing support itself? And how do we, make sure we're looking at this in its uniqueness to it compared to like comparing Boise to Arizona. You're going to be running those very, very differently.
Mm-hmm.
No matter how good your operations are, you need to make sure that this facility can survive on its own.
Again, just the king of all of it here is demand, right? Like going in and finding that demand. And I think there's a lot of times that we look at national data. We look at these national averages and we have these things popping up all the time, right? Whether it's rates in self-storage or it's occupancies in self-storage or it's cap rates. This is another one that I think folks get caught up on a lot is, like what are kind of the cap rates people are seeing in markets? By all means, you can look at cap rates, you can understand the data in these markets, but at the end of the day, you need to understand that you have to look at that specific market. You can't just say that, rates have declined a ton, across the country. It's like, yeah, well, maybe they have across certain cities and towns and areas, but shoot, you might have like a really high demand storage utilization or storage unit type that's actually increased. Like maybe there's some of that. Or I think climate control is a really good example of this, where people just assume that climate control is going to be a more expensive unit type, where they're like, man, if we just got some climate control in here, we can charge more and all this stuff. Whereas again, it comes back to demand and supply. Maybe the market's oversupplied on climate control and you're actually not going to be able to charge a premium for that unit type. So don't get caught up in the national averages. Focus on the micro, from population growth to diverse economic drivers to, healthy supply and demand. And again, that people are actually, like, the facilities are heavily occupied and you're looking at current and future supply. Those are the fundamentals, man, that we have got to focus on. And again, that just makes self-storage so freaking awesome to be able to go in and identify these things at a micro level.
No, this is great because I think too, even whether it's storage or whatever, any business out there, even if someone tells you it's good, doesn't mean it can't fail. And a lot of the reasons why businesses fail is that you're overlooking those things, like you're just accepting a blanket statement as true, like Connor's saying. With storage, like you could be in the same city and one part of this city in the Northeast and the Southwest are totally different competitors, customers who are renting from you, different types of population growth going on, different median household income. Like those factors can vary so much and can have a huge impact on the success of your business.
Yeah.
Something I think that's really important with all businesses really is that the businesses that tend to succeed over the long term, I'm talking years and decades, not just self-storage overall. It's not just that they don't always have the best technology. It's not that they have the best team. They're able to survive. They just have money to pay the bills to keep going. That's why we love storage for the cash flow aspect of it. Having something that can generate revenue to allow you to buy time even when times are tough, so that then you could take advantage of the long-term upside. The biggest way to get out of business is to run out of money.
Mm-hmm.
The second you do that, you're not able to participate in the upside of everything. And so that's where we come back to looking at self-storage. You can leverage the cash flow in the short term to allow you to ride it out to then benefit in the long term with the upside from it. And so it's a really important thing to be paying attention to, because there's so much noise over go invest in this, do this, or look at this metric, or inflation's doing this and interest rates are doing that.
Right.
None of it matters if you aren't able to, have the cash flow to pay your bills.
Exactly.
And if you have that taken care of, then you can ride out all of that noise that will continue to happen no matter what's going on.
Yeah, no, this is perfect timing because I just did a podcast with AJ talking about this whole concept of being hard to kill, being a business that's got liquidity, that has reserves, that has operating capital, that is poised for the rainy days, that is poised for the ability to strike when opportunity presents itself. Those things are so key, and being disciplined and setting yourself up for success in a way that allows you to do those things is amazing. And that's what is such a benefit of storage, is that you can affect that value, you can affect that revenue in such a short period of time, that you can build those reserves quickly, that you can, with good deals, right? If you can get good deals made. I don't want to, again, oversell you guys on this, like, yeah, just go out and buy anything and it's going to cash flow and give you all this stuff. It's not. Again, it's a business. Your expenses are going to go up and down. There's going to be the good times and the bad times. But storage, of all these assets, I mean, dude, it's one of the lowest defaulting assets, if not the lowest defaulting asset class out there in regards to real estate asset classes. And it's just an amazing thing to be able to build a business and to have a business that has those dynamics almost built into it. If you're, again, disciplined and you're running things right, if you're just using it like an ATM and going crazy and, I don't know, buying the Lambos or whatever, like that's a different story. But if you're setting aside those reserves, if you're reinvesting into the business and into your tenants and your facility and making things great for you, and maybe if you've got employees and all those things, that's where it's truly at, man. And storage is such an amazing place to do all of it.
One last thing I think that is important to talk about with self-storage is the industry itself. And I don't have a ton of experience in all the real estate industries, but the power of just the community in self-storage, I'm not just talking self-storage income, but just overall, it's a really inviting and warm industry. People are out there to try to help each other, whether it's brokers or lenders or other owners trying to help other storage owners. And I think that's something that's really great about this industry. Not to say that there isn't competition, of course there is, but when you look at this compared to other types of industries out there, like storage is fun to be a part of. Like there's a lot of great people in this industry. And I think that the people who come from other industries and get into self-storage find that out very quickly as well too, how much people look to help one another in this industry, because we really have the mindset of, a rising tide lifts all ships. And it's not like that in other industries, I don't think, quite like the way it is in self-storage.
Yeah, no, it's not, man. And that's actually one of the things that I've loved trying to bring to like other industries. When I'm like going to these business meetups or these different things, it's like, I mean, again, going back to the service-based stuff where it's like, hey, yeah, no, like I'll be an open book within reason. Obviously, I'm not going to disclose every single detail of the business, but at the same time, like there's a lot of stuff that I think people can be open about that they feel like they can't. And in the storage world, just coming from that, I'm just kind of used to it. I'm like, yeah, no, everybody's rates are posted online, and
Yeah.
everybody's like expense ratios are pretty well known. I mean, it's like if you're running remote or if you're doing this or that, like things are pretty fixed. It's pretty easy to tell, like what is what, and there's not a lot of secrets. So I think that's the other thing too that I think I can leave people with today is like the simplicity of it at the same time where. I mean, so often you're looking at these other businesses and or industries, and you've got so many moving pieces in the logistics and all of that. Again, storage is a business. There's a lot of that, but I mean, you're not dealing with constant, like let's say materials changes. You're not dealing with constant, changes in well, knock on wood, in policy and all these different things that affect so many others and how they operate. I mean, I've seen so many folks, I mean, just straight up go out of business because like maybe their materials increased because of tariffs, or, maybe they lost a ton of customers because some other random company is doing it for super cheap because they're a larger public company and they can float the loss and all these different things, whatever that might be. Storage again is just a great asset class to get into because there's so many just hedges against some of those things, and it just doesn't have the same dynamics as a lot of that. And again, there are risks, there are all those challenges that you've got to navigate, and that's what's important to consider, especially in your underwriting. Stress test stuff, make sure that you can be hard to kill, that you can weather storms, but at the same time, there's just so many just simplistic aspects about it. You're not dealing with people's homes. You're not dealing with long-term leases. You're not dealing with
They're just
all of
metal
these.
boxes. Like that's
Yeah, man.
like
Yeah. No,
so-
it
so-
really truly is. Like there's so much that's just standardized to it, just not a lot of dynamics going on there in those
yeah.
regards.
And I think like simple doesn't mean easy, but simple
Yes.
does have power to it, in that this isn't rocket science. You don't need a PhD to be able to own a storage facility. There can be complexity in the running of the business, but at the end of the day, when you zoom out and have the perspective, you're just providing a place for people to store their stuff.
No, exactly right. Well, let us know what you guys think down in the comments. If you're watching this on YouTube, would love to hear your guys' input. Do you think storage is great? Do you not? Do you think other asset classes are better or not, and why? Let us know, because I would love to hear the input. Obviously, we're a little biased on the storage side, so we're heavy on that. If you guys want to argue with us, let's get after it. So, and also, if you guys enjoyed this episode, please leave us a review. Always helps. Whatever platform that you're on, leave us a review. Give us that feedback. If there's stuff that you want to hear us talk about more, leave those comments as well. Love to get those episodes built out for you guys.
Love it.
All right. Catch everybody next time. Thanks so much. See you, George.
Later, Connor.